Andrea, first of all, welcome to Dubai. It's wonderful to have you with us in DIFC. And congratulations for opening your office in the Dubai International Financial Center, DIFC, this year.
Thank you. It's wonderful to be here, and we're so excited to have our offices here in the DIFC.
Excellent. To begin our conversation, from your perspective and what you have seen in the market, what are the key trends which are shaping the private investment activity in the region, talking about Middle East, Africa, and South Asia region today?
Yeah, in terms of key trends that we're seeing here in the region, a lot of it is based around the growth that we're seeing of the economies here as well, right? So there's often a lot of real estate development happening. I see that everywhere I go as I'm making my way around the region. Infrastructure investing, of course. There's a lot of industrial businesses that are really benefiting from the growth and also exporting globally. Consumer oriented businesses as well. And then, of course, there's technology. And so the trends that we're watching in the region are they're part of a much larger global trend, but it's really centered around the growth and the global entrants that are coming here to participate in the success of the region today. So it's kind of all over in terms of where areas are interesting.
And from all the different type of investment opportunities which you have mentioned, whether it is private equity, private credit, venture capital, or even infrastructure, there are a lot, right? Where are you seeing the strongest interest or appetite from investors from the region?
So thinking about where investors from the region are looking to add to the investments that they already have, right? So from a Cambridge Associates standpoint, we work with a lot of families in the region who may have a lot of direct investments within their current portfolio. And maybe their direct investments are within a very specific industry sector. And so oftentimes what we see is, depending on the family or the entity that we're working with, they may want to diversify and add exposures that are complementary to what they already have. And so it's a hard question to answer because depending on who we may be working with or the investors in the region, they may be looking to add venture to offset their infrastructure exposure, or they may want to invest more in consumer to offset their industrial exposure, or they may be very excited about consumer, even though they have a consumer business. So it's a hard question because you want to have complementary investments that match everything else that you may have in the region.
Excellent. And in your view, are there any specific industry sectors or markets in our region which remain overlooked? This is very important because there could be something which hold meaningful long-term potential. However, it's currently overlooked.
Yeah, it's a great question because when you think about areas that may be underserved with capital at the moment, it doesn't mean they'll always be that way, right? And the other thing I think about as you've asked this question is the time frame, exactly what you said, which is how long are you willing to invest to wait for that return in the result? And certain investors, particularly those in the private markets, when we work with investors in private markets, they have a particularly long timeline, right? So areas that may be underinvested in today, right? When I think about different spaces and places here in region, growth stage investing, right? Certain sectors, perhaps in the technology space that may not have all the capital it could absorb. Those are interesting. But then the question becomes, how long are you as an investor willing to wait to see that investment come back? And what's interesting is that the average time a private investment is held in a portfolio is 7 years. So this this region is going to look very different 7 years from now, and trying to anticipate where to invest. There are a lot of pockets, as you were asking. I think about technology and the rapid innovating that is happening here. I think that's a very exciting space.
Interesting. And as you know, families and institutions in the region are increasingly interested in investing in alternatives. However, the question over here, what do you see as the most significant challenges they encounter to access or even expand their exposure to these investment opportunities?
Yeah. Trying to build exposure to the alternative space is often tricky for so many reasons, right? Alternatives or the private markets are by their very definition private. So there's not a lot of information available about these investments or who you might want to invest with. And so I think a big challenge for any family or institution in this region or globally as we work globally is trying to get your hands around this big market, this big private market. And so I think a lot of the challenges are making sure you're doing your homework. This is not, there's no simple answer here. You have to get in, you have to do the homework, you have to meet all the opportunities, or as many as you can, so that you can build a proper context for when you find the right opportunity that is a good fit for your portfolio, appropriately complementary, as we discussed earlier, right?
Yes.
And so honestly, that's a bit of the challenge, is getting access to the right information. And this is a private market, so it's not available. And then making sure you're meeting all the possible options that you think are viable for you and your institution and portfolio. It's not easy.
Very interesting. Interesting. And based on your international and global perspective, how do you see investment strategy in the region compared to those in more mature markets like the United States or Europe?
Yeah. I think within the region, it's a very exciting time, and that's why we're excited to be here and be part of the ecosystem, because there's a lot of growth happening in so many different directions, right? From real estate, infrastructure, consumer, technology, industrial, all the things we've been talking about. And so I think what's exciting here is being able to watch the acceleration of the growth in all of these spaces. And there's a wonderful opportunity for investors to participate in that growth in a way you can no longer do in other regions around the world, because they're maybe more mature in those specific areas and subsectors. So I think that's what's very exciting about being here now and being able to invest and participate in the growth of the overall ecosystem here.
Amazing, interesting. Do you observe growing demand on direct investment opportunity or more of co-investment with more mature fund managers in the region?
I think the answer is going to be a little bit of both, actually. So when you think about direct investing, a lot of the institutions and the families that are here know a lot about maybe their family businesses, or know a lot about the entities that the institutions own. And going investing directly into other businesses around those sectors is a great use of the experience and talent that's already here. Co-investments are often when you're co-investing alongside a manager who may have more experience in a different sector or space, and they happen to have a little extra capital, right? So I think for families and institutions here, co-investing may actually feel a little foreign, actually, right? Because you've built your business, you know how to invest directly. Partnering with another entity, a professional manager, to co-invest in an area that you may not be as comfortable doing solo, I think is an activity that's been increasing. And a lot of institutions here are pursuing that because perhaps they may not have as much industrial experience or sector experience as some of the families that are here.
Interesting. And as you know, you have a lot of clients in the region, and it would be great if you can give us an example how an organization like yourself, Cambridge Associate, helped and supported a family or an institution to build a strong investment strategy.
Yeah. And I think one of the observations, and we've been working with families here for over 2 decades, and it's always exciting to get involved in helping a family build a lasting legacy to support their philanthropic activities, their family activities, et cetera. And there's a lot that is similar around the world with families. There are personalities involved, there are different generations, and you have to take that into account. And so the way that we work with families here in the region is very similar to how we work with families everywhere. It kind of starts with, what are the goals? What are the goals? Um, what are the generations that we want to include in this decisioning? What are the goals? Do you want to diversify so that you have more complementary sources of return beyond maybe the initial investments that created the opportunity to have a family office in the first place? And one of the other things that we think about a lot at Cambridge Associates, we've been around for 50 years, is we've seen a lot of cycles. And so one of the bigger pieces of advice that we bring to everyone we're working with is thinking about that diversification. Have complementary exposures and diversify so that, heaven forbid, if there's a bump in one area of investing, the other areas will support that. And diversification is a way to focus on that. So that's one of the key tenets that we do work with all of our clients on. And within families, another element is different generations may have different priorities,
Different appetite.
different risk appetite, maybe different interests in terms of where they would like to invest. And so one of the things that we at Cambridge have a lot of experience doing is working between and among generations to find and help the families we work with arrive at the right kind of asset allocation that hopefully addresses the broader interests of the family, right? And it's exciting. Families last for generations, right? So there's a lot of patience that you have to bring. And what we hope to do is just bring our experience and our knowledge. And we work with hundreds of families around the world. And so we can always bring a little bit of, well, we're aware of this example over here. It may work with what you're trying to accomplish as a family, but we're also very good at listening, right? So it's so much fun to get to work with families, and hopefully this gives you a little bit of a flavor. It's not as straightforward as you might think, right?
Yeah. Talking about, regional investors, as you know, in this region, the investors become now more globally active. What do you think, when it comes to a hub like DIFC, how can we support, these institutional investors, the family businesses in their journey to get access to global, platform and global investment opportunities?
Yeah, the DIFC is a beacon for international managers, travelers. I've been coming to the DIFC for over 10 years, and so I've had very productive meetings of all kinds with managers, with local entities, and it's been such a productive hub for activity. There's a lot of overlap of different entities. You can have a very productive time here in the DISC. And I really feel it's been an accelerator for being able to drive more global exploration for the local entities and families that are here. So I've always appreciated the DIFC, and I'm so happy to be here to get to talk to you today.
No, thank you. Thank you so much, Andrea. We really enjoyed the discussion today, and it was a pleasure to host you today with us on the DIFC Unplugged, podcast. Thank you so much.
Thank you.
Thank you.